Hey everyone, welcome back to Commodities with Sam. The gameplay is rolling in the background, and today we're diving deep into the gold market outlook for 2025. What's driving the rally, where prices are heading, and what it means for investors and traders like you. If you're watching gold as a hedge, a trade, or a long-term play, this one's for you. Let's break it all down. As of mid-May 2025, gold is trading around $3,300 per ounce. That's a massive move, up nearly 28% year to date. Just last year, we were hovering in the $2,050 to $2,100 range, and now we're at all-time highs. So what's driving this surge? First, let's talk about central banks. They've been major buyers. According to Metals Focus, central banks are on track to buy nearly 1,000 metric tons of gold this year. That would make 2025 the fourth consecutive year of massive sovereign gold accumulation. The trend began to accelerate in 2022 as global monetary policy started to shift, and now it's being fueled even more by geopolitical uncertainty and a broader move to de-dollarize reserves. This de-dollarization is a big deal. Countries like China, Russia, and even some Gulf states are moving away from the US dollar in their foreign exchange holdings, looking instead to gold as a neutral, trusted store of value. That shift is pushing institutional demand even higher. Now, let's talk about retail and ETF demand. In markets like India, gold ETFs are booming. Just between January and April this year, assets under management in gold ETFs rose by 27%, even as jewelry demand remained flat. Why? High prices are keeping physical buyers cautious, but digital gold is picking up the slack. And this isn't just an India story, it's happening across Europe and the US as well. Investors are looking for inflation protection, and gold still holds psychological and historical weight. Speaking of inflation, even though US inflation has moderated to around 2.8%, real yields are still low, and there's widespread concern that central banks may not be done raising rates. That's fueling hedging behavior. Combine that with global instability, ongoing Middle East tensions, trade war risks, and fragile financial markets in both Europe and China, and it's a perfect storm for gold to shine. Supply isn't reacting fast enough either. Despite strong prices, new gold production is relatively flat. High costs, ESG constraints, and long project lead times mean supply-side relief isn't coming anytime soon. That gives the bulls a solid case. Now, what about price forecasts? Goldman Sachs recently raised their year-end target to $3,700 per ounce, citing structural demand from central banks and limited supply response. Some more aggressive forecasters, like CoinCodex, are talking about gold hitting $4,600 to $4,700 in a high-squeeze scenario. That would represent a nearly 40% move from current levels. While that's a stretch, it's not impossible if we see a major macro shock or dollar correction. That said, traders need to be cautious. When gold moves too fast, corrections can be brutal. We've seen that before. If central banks pause their buying, or if inflation falls off faster than expected, gold could easily pull back below $3,000. So, what's the play here? If you're a long-term investor, gold still makes sense as a portfolio hedge, especially in this macro environment. But traders might want to look at gold volatility products, or even silver and platinum as high beta plays tied to gold sentiment. And watch those technicals. $3,300 is a key resistance, but if we break $3,400 with volume, we could see a fast move to $3,500 and beyond. Bottom line, 2025 is shaping up to be a golden year, literally, for gold investors. But as always, don't chase blindly. Watch the data, track the flows, and manage your risk. As some of you may know, I write a report on the commodity markets designed to save investors and traders time and effort on market research and decision-making. If that sounds useful to you, check it out in the description of this video. If you found this breakdown helpful, make sure to like, subscribe, and drop a comment with your thoughts. Are you bullish or cautious on gold right now? See you in the next one.